Hey, so a couple weeks ago I asked, what's something you wish you understood better about the mortgage process? And I got a lot of really good responses. Where I saw the most overlap was relating to student loans and qualifying with student loan payments. So I'm going to try to tackle this. It's a huge topic, so I'm going to break it down and do a couple different videos here throughout the week, starting with qualifying for a mortgage, an FHA mortgage specifically, while carrying student loan debt. And I'm going to start with FHA because oftentimes the people who are asking me about student loans are carrying them, maybe are first-time homebuyers, recent college grads, and this is a great program for you. How do you know if you're an ideal FHA borrower? There are a couple of things that come to mind quickly, and these are not hard, fast rules, just generally speaking, what I've seen people do in the past. So first of all, if your credit score is at or around, at or below really a 680, right? So maybe you've recently graduated from college and you don't have an established credit history long enough to be at like a 760 or a 720 FICO. Just is what it is. That was my situation the first time I bought a house. Or maybe you've got some bruises in your credit, some dents and things because life happens, right? FHA is generally more forgiving in that regard. The second is debt to income ratios. So like that means what's coming in as income every month versus what's going out based on debts or obligations on the credit report plus our new housing payment. So FHA is a bit more generous when it comes to total debt to income ratio. And then the third thing that I always think about is how much money are we putting down, right? If you're putting 20% down on a conventional plan, even though your interest rate may be a little bit higher than FHA, at a low FICO, you're not gonna have mortgage insurance. So what's the overall best thing for you? So again, generally speaking, I'm looking at, you're probably a good fit for FHA if your FICO is at or below 680, if you don't have a ton of money that you plan to put down on the house, and if your debt to income ratio is a little bit higher. There are so many tiny little things that go into this related to income, assets, the property itself, and the credit history that you have that I can't say with full certainty, this is the program for you. But what I'm saying is, when you talk to your loan officer or leading into that conversation, you can kind of gauge or have expectations about what might be a good fit for you. And so for my FHA crowd, here's what you need to know about qualifying with student loan payments. Okay, so the first thing, we have to hit you for some payment on your student loans, regardless of whether they're in forbearance, if they're deferred, or if you're on an income-based repayment plan with a zero payment. We can't show zero because it won't always be zero. FHA cares about what's gonna happen from an ability to repay perspective as things change for you. So ideally, right, you're gonna start making more money. If you're on an income-based repayment plan right now, ideally you'll start making more money over time and you'll have a payment that comes into play. So FHA is gonna be a bit conservative and say, we need to use something to qualify. So how do we pick what number to qualify you with? There's a couple routes we can take. The first avenue is we can take the greater of the following, either 1% of the outstanding balance of your loan or the payment on the credit report. So 1%, let's just say you owe $45,000 in student loans. 1%, we're talking $450 per month. The alternate would be if you had on your credit report, let's say $475. We'll take the greater of. So in this case, it would be what's actually on the credit report. Flip scenario, let's say that your credit report has $425 and $450 is what it would be at 1%. We'll take that $450. Again, a conservative approach. Alternately, we can look at, assuming we have documentation from the student loan servicer to verify and validate this, we can look at qualifying you based on a fully amortizing terms of repayment, and we'll look at what that monthly payment would be. We would need those full docs from the servicer in order to take that route, so make sure that you're prepared to take that step or have that documentation ready for us. The last thing I want to mention is oftentimes, not oftentimes, but sometimes I see people will let their student loans go into collections. That's a big no-no for FHA, and the reason is really simple. It's a federally obligated debt, and so if you're delinquent on federally obligated debt, you're not going to be eligible for the FHA program. So what do you need to do? Call the servicer, get out an income-based repayment plan, or work it out with them so that you're back in good standing so that we can go ahead, use that payment, and get you qualified. Again, before really taking any step here, if you are in a scenario that's more dire where your collections, your student loans have gone into collections, talk to a loan officer. We know our stuff. We're here to help you. And if you have questions, you can leave them in the comments below. Thanks.